Greetings, my name is Ted Hicks. I'm the Chief Investment Officer for Hicks Associates Wealth Management here in Cary, North Carolina. That said, we do serve wealth management clients scattered all over the nation. So if you're looking for a second opinion, by all means, feel free to reach out to us, regardless of where you are, and we would be happy to see if we can't be of service to you. That said, today's video is got two main points. One is taxes and year-end tax planning, and then the second point is just want to show you some good news that we see underneath the surface of the broad stock market indices. So first up, today is Friday, December 8th, 2023. So this is kind of the heart of the year-end tax planning season. So two main points. For those of you old enough, you need to make sure that you've taken your required minimum distribution before the end of the year. Now, and remember, if you don't take that required minimum distribution, the penalty is 50% of the amount that you should have taken. However, I was in a continuing education class just recently, and the CPA that I was listening to was making the comment that it seems like the IRS is going to be making some changes to that penalty, and that's good news and maybe bad news. The good news is it seems that the penalty is going to be coming down. I'm not sure that that's finalized just yet, so don't make any plans. However, from the comment from the CPA was that the conversation is that this penalty is going to go down to 25% and then 10%. So it was, or it currently is 50%, but then it might go down to 25 and then eventually 10. However, according to the CPA in this continuing education class, today it is fairly typical that if you miss your required minimum distribution, is fairly typical, not guaranteed by any stretch of the imagination, but you can get that penalty waived, and the IRS has done that apparently a fair amount. However, the fact that they are talking about bringing down that penalty to this CPA that I was listening to is suggestive of the fact that they're actually going to start enforcing that penalty. So bottom line, if you are over the age of 70, you're not necessarily eligible for required minimum distributions yet, but you need to start planning. So again, if you haven't had those conversations with your financial planner and or your tax advisor, you need to start having those conversations. Again, if you're confused, by all means, reach out and I'll see what I can do to clarify the confusion. The other thing I want to talk about is long-term capital gains. So on the screen right now is the long-term capital gains tax rates. And in particular, I want to call your attention to this 0% tax bracket, that top line. Frequently, not always, but frequently, we have clients who retire before they get to 65. And so there's a couple of gap years where there's not a lot of taxable income and they're living off of other assets. They're living off of cash, for example. And so there might be a couple of years where our clients are actually in a 0% capital gains tax bracket. Well, we want to make sure that we take advantage of that and we realize as many capital gains as we possibly can to bring up the basis in that account. If you're in a lower income tax bracket this year because of just the stage of life that you're in, and this also applies, by the way, if you were laid off, for example, early in the year and you haven't found a new job just yet, well, you might be in that 0% capital gains tax rate, so you want to make sure that you're taking advantage of that. Again, by all means, feel free to reach out to us or your financial advisor, and certainly we would encourage you to double check with your tax advisor. But if this tax rate applies to you, it is frequently a limited time thing. So you want to make sure that you capitalize on that. Let's switch gears and let me show you some of the good news that we see underneath the surface of the stock market. So on the screen right now, I'm trying to show you advancers versus decliners. So the top portion of the chart is IWV. This is the iShares Russell 3000. We talk about this a lot because this gives us a better indication of the broader market, not just the S&P 500 or not just the Dow Jones Industrial Average. This is a broader measure of the stock market. But in particular, I want to guide your eye to the right-hand side of the screen. Again, this is weekly data. So this is a weekly candle chart up here. And then these are weekly data points down here as well. The green bars are advancing stocks and the red bars are declining stocks. And take a look at these last several weeks. We're seeing consistently more stocks that are advancing than are declining. That's very good news. And the last point that I will make for the day is that there is a little bit of a rotation. Now, this data is only from November 30th, but that's on purpose. I'm trying to show that so far over this, just really, it's only about a week worth of data, but over the last week, the small cap indexes, the S&P 600 index is up about 3.6%. versus the S&P 500 is up only about 0.4%. That's really good news because we've been saying this all year long that the majority of the S&P 500's advance has been contained in those magnificent 7 stocks, and we really need to see some participation from everybody else. Well, that's when we look at this advancers versus decliners, and then we also look at this. There's maybe a little bit of a rotation going on in the stock market where we're finally starting to see some more participation from those that are not in that magnificent 7. Anyway, I hope you find this helpful and encouraging. By all means, if you have any questions, especially from the taxes points that I'm trying to make, feel free to reach out to me, or certainly we would encourage you to reach out to your tax advisor. Again, if there's anything that we can do for you, whether it's financial planning or wealth management and portfolio management, by all means, feel free to reach out to us. We'd be happy to schedule either a virtual meeting or a face-to-face meeting if you are in the Raleigh-Durham area. Again, thanks for watching, and we'll talk to you soon.